Adam Criticos here with Cross Country Mortgage. I want to share with you the benefits of doing a temporary buy down over a price reduction in this market. I put together a video similar to this around this time last year when interest rates were above 7% for an extended period of time and the market slowed down. This was a benefit not only for buyers by getting a lower interest rate and a lower payment temporarily, but it also will help seller instead of having to take a huge price reduction. So we're going to use two examples. These are the most common, which is a 3-2-1 buy down and a 2-1 buy down. Now with a 3-2-1 buy down, you have to put down at least 10% because a seller can only give you a 3% seller credit if you put less than 10% down. So if you're putting 3 to 5% down on a property, a 2-1 buy down is a great example. If you're putting 10% down or more, then a 3-2-1 buy down will be perfect for you as a buyer and that also as a seller. So let's jump right into this example. This is based on a purchase price of $650,000, putting 20% down. That's the way we can do a 3-2-1 buy down. Your loan amount will be $520,000 based on an interest rate of 7.625. So the 3-2-1 buy down works like this. Year one, we are buying your rate down by 3%. Year two, we're buying it down by 2%. And then year three, we're buying it down by 1%. That's why it's a 3-2-1 temporary buy down. Your total mortgage payment, what we have to qualify you on as a buyer, is based on the actual current market rate of 7.625, which is $3,680 a month, principal and interest. Okay. The reason why doing a temporary buy down will be more beneficial as a buyer is because let's say right now, instead of you offering $650,000 on this property, you offer $625,000, which would give you a price reduction of $25,000, which is very similar to the actual cost for the temporary buy down. So your principal and interest is $3,680.53 for the total monthly payment at 7.625. If we drop that price down to $625,000, your loan amount goes to $500,000, and then your principal and interest payment goes to $3,538.97. So your total savings will be $141.56. That would be based on doing a price reduction on the current market rates. So let's look and see, let's put the numbers back at the purchase price of 650. So that way, instead of doing a price reduction, you're asked the seller as a buyer to do a buy down. So now, instead of you saving the $142 a month, right? You're saving $1,000 a month in year one. You'll save $687 a month in year two, and then almost $351 a month in year three. Okay. And the whole idea is hopefully by year two, we're anticipating that rates are going to drop, within the next 12 to 24 months, and there'll be an opportunity to refinance you. But in this situation now, instead of you saving $142 a month as a buyer, your payment is $1,000 less per month in year one. And the beauty of this program is, let's say after year one, you've used 12,000 and change of the temporary buy down. So, and you have about 12,500 left. Well, if after year one, rates are at 5%, and we're like, okay, we're going to refinance you, then whatever money is left over from that buy down will be refunded back to you as a principal reduction. So you're going to get that money either way, but what is more important to you as a buyer? Most buyers that I talk to, the most important thing is what they can afford and what they pay per month. And I can guarantee that you'd rather save $1,000 a month for year one than $142, especially knowing that you can get that money back if you don't use up the full temporary buy down. This is the exact same scenario if we did the 2-1 buy down, except for it's less money you're saving per month because we're buying down your rate by 2% the first year and 1% the year two instead of 3, 2, and 1. So hopefully this all makes sense to you guys. This is me trying to explain it to you as quickly as possible on how this works. So, we have seen a slowdown. We are starting to see homes sitting on the market for more than 30 days. So as a buyer, if you're interested in something like this, please feel free to reach out. We can give exact examples based on purchase price and down payment. And then as a seller, please reach out to me so I can help explain that to you in more detail of how this will work, so that way you can properly market your property and not have to do major price reductions. Instead, you can offer this temporary buy down that will really benefit the buyer and also you as a seller. DM me, call me if you have any questions, and we'll talk to you later.